Welcome to the Explainer. We're diving into some absolutely critical, highly time-sensitive market intelligence for the global nylon 6 and PA66 landscape today. If you're managing supply chains or negotiating contracts for the second week of July 2026, grab a notepad. Let's unpack this data together and figure out exactly where this market is heading. As always, we're drawing our insights directly from Polymer Bazaar's weekly report. You know them. They're a trusted authority in polymer pricing and predictions. Their datasets are really solid, professional baseline for our global market tour today. Basically, when they publish a trend, the entire market pays attention.
Here's a quick roadmap for today. We'll hit the global feedstock price update, check out the USA and Europe market trends, pivot over to the China and India market trends, and then wrap it all up with the buying pulse and our final recommendations.
Okay, let's dive into this with the global feedstock price update.
To set the stage, we need to look at our foundational ex-China feedstock prices. Right now, caprolactam is sitting at RMB 10,900 per metric ton. Meanwhile, adipic acid, it's positioned at RMB 7,900 per metric ton. Keep these baseline costs in the back of your mind as we go through this explainer because we really want to see how these upstream costs are trickling down or honestly failing to prop up prices across all the different global markets.
Moving on to Section 2. USA and Europe market trends, let's see what's shifting in the West.
Now, what's really interesting here is this massive number, 127. Over in the US, market sentiment has just been incredibly dull lately. A major driving factor? Cyclohexane prices have absolutely plummeted by 127 cents per gallon. I mean, that is a dramatic drop, and it's heavily impacting the overall market psychology and the pricing structure stateside.
Because of that incredibly weak sentiment and those tumbling upstream costs we just looked at, we're seeing across-the-board drops in the United States. US PA6 prices decreased by 15 cents, bringing them down to 125 cents per pound. And, it's a very similar story for PA66. Demand remains notably weak, and with adipic acid prices dropping by 18 cents, it basically dragged US PA66 prices down by 14 cents, sitting at 165 cents per pound. Both of these key markets in the US are just clearly struggling to find any real demand traction right now.
Crossing the Atlantic over to Europe, well, the picture doesn't really get much brighter for producers. We're looking at a sheer plunge of 200 euros per metric ton in Europe's PA6 prices. So why such a steep drop? Well, weak demand is continuing to persist right across the region, all while supply remains completely ample. On top of that, July benzene contract prices took a significant hit, declining by $140 per metric ton. When you combine that ample supply with crashing contract prices, you get this massive 200 euro slide.
And this brilliantly illustrates the synchronized soft purchasing environment we're seeing over there. That 200 euro drop puts Europe PA6 at 2,100 euros per metric ton, delivered duty paid in Northwest Europe. On the PA66 side of things, purchasing activity remains soft, overall production costs declined, and as a result, prices decreased by an almost identical margin, down 205 euros to 2,794 euros per metric ton. So we're seeing lower production costs echoing loudly across Northwest Europe, met by, very cautious, hesitant buyers.
Let's move to Section 3 and see how this builds into the China and India market trends.
Over in China, we see a really fascinating contrast that tells you a whole lot about current consumer demand. For PA6, production costs actually went up due to higher caprolactam prices. But despite those rising costs, ex-works prices, they just remained flat, stable. Producers couldn't raise their prices because downstream demand is just too weak to absorb it. It's a classic margin squeeze. Then, looking at PA66, buyers remained highly cautious, strictly purchasing only on a need basis. Converters are running their factories at noticeably lower rates, and a thoroughly pessimistic sentiment is pretty much prevailing among all the market participants.
Heading south to India, the overarching market trend continues to mirror the rest of the globe. It remains soft. Looking at the specific spot prices, and these exclude GST by the way, the numbers for nylon 6M28 RC are hovering right around that 218 to 223 rupees per kg mark, depending on whether you're in Mumbai or Delhi. And for nylon 66, specifically BASF A205F, those major hubs are trading tightly between 305 and 309 rupees per kg. Overall, it's a consistently stable to soft market across these key trading centers, which really reflects that broader global hesitation we've been tracking today.
Finally, Section 4. Buying pulse and recommendations. Let's synthesize all this.
When you look at the overarching global buying pulse, it's actually kind of incredible. You start to realize you're hearing the exact same words repeated in every single region: dull, weak, soft. Buying interest globally is totally subdued right now. Processors everywhere are purchasing only against immediate, strict requirements. We basically have a situation where comfortable material availability is colliding head-on with persistently weak downstream demand, and that fundamentally restricts trading activity. In fact, market participants fully expect domestic producers to reduce nylon 6X works prices in the coming weeks. And honestly, that expectation of future price drops alone is enough to keep buyer sentiment extremely cautious.
So the crucial point is this. Considering the prevailing soft demand and the ample availability we've seen on literally every continent, traders are likely going to reduce their retail offers just to attract buyers. Therefore, our definitive recommendation? Buy only on a need basis. Protect your working capital, and absolutely avoid any unnecessary inventory buildup in this current economic climate. It's just not worth the risk.
Now, if you want to stay ahead of these rapid market shifts, getting future trends is incredibly easy. Step 1. Save the number +91 9374 624365 to your contacts. Step 2. Send a quick WhatsApp message saying either PA6 or PA66. Step 3. You'll instantly receive AI-powered weekly reports and price predictions sent right back to you in just 5 seconds. It is a brilliant, super efficient way to keep this level of market intelligence right in your pocket.
Furthermore, if you need direct assistance with nylon prices, market news, or finding buying and selling leads across India, Polymer Bazaar's dedicated relationship manager will help you source and sell material at the best possible price. You can contact them directly at +91 931139 24365. And, of course, for more informative market updates, future trend predictions, and industry insights just like this explainer, make sure to subscribe to the Polymer Bazaar YouTube channel and hit that bell icon for notifications. As we wrap up this global tour, I want to leave you with this final thought. In a universally soft market where everyone is basically waiting for the floor to drop, are you structuring your supply chain to be agile enough to buy strictly on need? Or will excess inventory end up weighing down your margins next quarter? Really think about it. Thanks for joining me on this explainer and have a great day.